Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay. Let's jump right into it. We had a VIX settlement today for February. We settled at 26.37. Now, 26.37 is a lot lower than the 31.99 we saw on Monday, a lot higher than the 24.56 we saw overnight. So certainly we're seeing a normalized return to volatility, and that should be expected as we hear more and more about the Fed saying we want to normalize the markets. Now, if they actually follow through on that, that will mean that they will increase the interest rates, but more importantly, reduce the liquidity that they're adding to the market by ending their asset purchases. Now, should that happen, of course, we'll see volatility start to elevate, and we'll start to see a different story that we've known for the past 12 years, which is you can't just blindly buy everything. You can't just blindly buy the dip in the indexes either. So there's going to be some winners and losers, and there's going to be some periods where we're going to see some corrections in the market, should that come to pass. Now, also in the market, we're seeing a lot of moves like I just mentioned in the VIX recently, and it's coming from the headline risk we all know about. Now, as traders, I think it's dangerous to be just waiting on pins and needles for these headlines. We have no control over them. Now, I'm not saying don't follow the news. Of course, we should be interested in what's going on there. However, I think we should be more interested in what the charts are saying as traders. And the charts are telling me we're range bound. We got 4,300 on the downside in the S&P 500, 4,580 on the upside in the S&P 500. And that actually sets up for some interesting trades for traders with interesting stops to get out of them built in there. Now, of course, that said, a break of that range, I think, will cause a move. And certainly it wouldn't surprise anyone to say if we go below 4,300 in the S&P 500, I expect we'll make a new high, relative high in the VIX. It'll be above 39. Maybe in the mid 40s would be possible, because I think we're going to see some movements if we get outside that range. So in summary, don't follow the news, watch the charts. They're going to tell you everything that you need to know about what the headlines actually mean. For Equity Armor Investments, I'm Joe Tigay.